Hello, and welcome to Markets in Focus. My name is Joe Bell, and today I'm going to walk you through some of the most interesting financial market themes that I'm observing and also give you a few key takeaways to help you navigate the markets yourself. So the month of June was pretty strong for the S&P 500, up more than 2%, but if we look underneath the surface, there actually has been a bit of weakness that is a little concerning. Number two, supply chain issues continue to be one of the reasons why prices remain elevated and why we've seen this above average inflation. Let's talk about the number of products that are still out of stock on retail shelves. And then finally, global equity fund flows continue to set all-time records, nearly $600 billion in fund flows to global equity funds during the year of 2021. So S&P 500, what we have here is a chart of all the monthly returns since the start of the post-pandemic bull market. Month of June up 2.2%. But what's interesting, if you look at the number of advancing stocks and the number of declining stocks on a monthly basis, this is the first month during this bull market where we've had the market up and we've actually had more declining issues than advancing issues. Okay. So what's this mean? This means on the surface, the market's trending higher, but underneath the surface, there's actually not a lot of participation. We see this reflected from a stat called the percentage of stocks above their 50-day moving average. Right now, less than 50% of the stocks in the S&P 500 are above that 50-day moving average. Part of this is related to the rotation that's going on. We're seeing a lot of those leaders, the financials, the cyclicals, like materials and industrials, those have sold off. We've seen some of the old leaders that have lagged during the post-pandemic bull market, technology, healthcare, some of those large cap names, those have started to pick up. And in the midst of this rotation, we're seeing some of the underneath breath that we're talking about right now. Doesn't mean it's all right. I think we need to continue to monitor this to see if this broadens out to sort of a larger concern. But right now, this would definitely be something to keep an eye on. Now, inflation, one of the culprits has been supply chain issues, and it's still not letting up yet, but it has started to improve during the past several months. Not so much past several months, but the past 12 months, rather. But one of the things we've seen is it's still pretty elevated at 30%. So a couple professors from Harvard basically look at and survey all of these retailers online, more than 17 retailers, more than 700,000 different products across 5 different categories, and basically just track what percentage of these products are out of stock on the retailer websites. Now, one of the interesting things we see here is when you look back to sort of pre-pandemic world, late 2019, early 2020, we still see this sort of cyclical behavior, but it tended to range between that 5 and 18%. And we're still very, very elevated. So as these supply chains improve, as companies replenish their inventories, we would expect sort of the price push from the supply side start to decline a little bit. And finally, global equity fund flows, nearly $600 billion in 2021. You can see how large this is compared to what we've seen during the past couple decades when bond fund flows really outshine the equity fund flow world. But I think in this post-pandemic risk on market right now with interest rates near multi-decade lows, even though they've increased a little bit, they're still very, very low. We've really seen a return to the equity world in terms of fund flows. If the pace continues, we could not only obviously be the largest year, which it for sure will be in history, but it actually would be more than every year on record combined. Okay, so it's pretty interesting how much fund flows have actually gone into equities. And then finally, thank everyone for watching. Everyone's talking about inflation. Keep an eye out for shrinkflation or downsizing, where companies aren't actually decreasing the price of goods. They're actually shrinking the size. We've seen some reports of this on cereal boxes and other products like toilet paper and things like this. Interestingly enough, what from an economic perspective, it's the same thing, right? We can decrease the size at the same price, and that's a price increase. In terms of reality, studies have shown that actually people don't react as much to changes in quantity as they do as changes in price. So be careful, be aware, check those cereal boxes, make sure you're getting what you're paying for. All right, well, thank you for watching, and I'll see everyone next time.